and welcome. I'm your Noble Star Realty AI assistant, here to walk you through this contract in a way that's easy to understand. Before we begin, please remember that this is not legal advice. I'm here to help explain the contract, but if you need legal guidance, you should consult an attorney. Paragraph 1, Property Description. Important details about the property being conveyed. It spells out the property's address, making sure we're talking about the right place. The county and tax ID number. This is how the government keeps track of the property. What comes with the property? Built-in items like kitchen appliances, cabinets, flooring, and light fixtures. Personal property the seller is leaving behind, like a fridge, stove, or blinds, unless excluded. Key takeaway: make sure everything the buyer expects to come with the home is either listed as included or not listed under excluded items. If there's something important, like a chandelier or washer and dryer, let's make sure it's in writing. Paragraph 2, Purchase Price and Deposits. Here's where the money talk starts. Total purchase price, the agreed purchase price for the home. Deposit, escrow money. This is the good faith money the buyer puts down to show that they're serious. The buyer can give it with their offer or within a few days upon the execution date. The default is 3 days. This deposit is held by a neutral third party, the escrow agent, until closing. Additional deposit. Sometimes a second deposit is required later on. Default is 10 days. Financing amount. If the buyer is procuring a mortgage, this is how much they're borrowing. Balance due at closing. The final amount due at closing, after deposits and loans are factored in. Key takeaway: if the buyer breaches the contract and tries to back out without a valid reason, the buyer could lose their deposit. If the buyer is securing a mortgage, the buyer's lender will need to approve the loan. Paragraph 3, Time for Acceptance and Effective Date. This section is about how long the deal is valid before it expires. If the seller doesn't sign and return the contract by a certain date, the offer is no longer valid. If there's a counteroffer, you usually have 2 days to respond, or the deal dies. The effective date is when both buyer and seller sign and agree. It starts the clock on everything else. Key takeaway: nothing is official until both parties sign. Pay attention to deadlines. If you miss one, you could lose the house or your deposit. Paragraph 4, Closing Date. This tells us when ownership officially transfers to the buyer. The closing date is the day that the buyer pays the final balance and takes possession of the property. Everything, money, paperwork, title work, must be completed by this date. The buyer can move in after closing unless the seller is staying longer, which should be in writing. Key takeaway: make sure the closing date works for you. If the buyer is securing a loan for the purchase, the lender's process can delay closing, so stay on top of their requests. Paragraph 5, Extending the Closing Date. Sometimes things don't go as planned. If the lender needs more time due to federal loan regulations, the closing can be extended up to 7 extra days. If a natural disaster such as a hurricane or flood occurs, closing can be extended. Key takeaway: delays can happen. This protects both parties from unexpected issues. Paragraph 6, Occupancy and Possession. Who lives in the house and when? The seller is supposed to vacate the home by closing unless otherwise agreed. All personal belongings and trash must be removed before closing. If the home is being rented, the seller must provide copies of the lease. If the seller wants to stay after closing, a post-closing occupancy agreement will need to be agreed upon and in writing. Key takeaway: make sure the home is empty and clean on closing day. If tenants are involved, the buyer should review the lease, as they will be the new landlord. Paragraph 7, Assignability. This is about whether the buyer can transfer the contract to someone else. The contract can allow or prohibit the buyer from assigning it. If allowed, the buyer can sell the contract to another buyer. Investors do this sometimes. Key takeaway: most buyers don't need to assign a contract, but if you're an investor, this is important. Paragraph 8, Financing. This section is really important because if there is a mortgage, there are some deadlines and conditions that must be considered. Option A, Cash purchase. If the buyer is paying in cash and there is no loan, this section is simple. The buyer just needs to show proof of funds and bring the money to closing. No lender delays, no appraisal concerns, no financing contingencies. Option B, Financing Contingency. If the buyer needs to secure a mortgage, this section explains the important steps and variables involved with a finance contingency. The buyer typically has 30 days or another agreed time frame to secure loan approval. If the buyer can't get a loan within that time, the buyer can cancel the contract and get their deposit back. The buyer must apply for financing within 5 days of the contract's effective date or another agreed time frame. Appraisal requirement. The lender might require an appraisal to ensure the home is worth what the buyer is paying. If the home appraises too low, the buyer may have to pay the difference or renegotiate the price with the seller. Key takeaway: if the buyer is securing a loan, the buyer should stay in close contact with the lender and make sure that all deadlines are met. If the buyer's financing falls through, the buyer could lose their deposit unless they've followed the proper cancellation steps. Paragraph 9, closing costs. Buying a home comes with extra costs beyond the purchase price. This section explains who pays for what. Seller's costs. The seller pays for things like realtor commission fees, title insurance, document stamps, taxes on the deed, and fees to clear up title issues. If the home is part of an HOA, the seller must pay to provide an estoppel letter, which confirms any dues owed. Buyer's costs. Buyer's closing costs typically include things like realtor commission, but only if the seller or listing broker is not paying the buyer broker fee. Loan fees if financing. Appraisal costs. Survey to confirm property boundaries. Home inspections. Home insurance. HOA transfer fees if applicable. Title insurance and escrow agent selection. The contract lets either party choose who handles the closing. This varies by region. Finally, make sure that the appropriate boxes are checked regarding the home warranty and special assessments. Key takeaway: sellers can expect to pay between 6% and 7.5% of the purchase price in closing costs. Buyers procuring a mortgage can expect to pay between 2% and 3%. Make sure you review the breakdown so there are no surprises at closing. Paragraph 10, disclosures, what you need to know about the property. This section includes important warnings and disclosures. Radon gas notice. Florida has naturally occurring radon gas that can be harmful at high levels. The buyer may want to test for it. Permit issues. If the seller knows about any unpermitted work, like a room addition without approval, they must disclose it to the buyer. Mold and flood risk. Mold is a common issue in Florida. If the buyer has concerns about mold, they should get a mold inspection. The seller is required to provide the buyer a flood disclosure. The buyer should verify if the home is in a flood zone because that affects insurance costs. Lead-based paint for older homes. If the home was built before 1978, there must be a lead-based paint disclosure. HOA or condo fees. If the home is part of a homeowners association, HOA, the seller must provide the buyer an HOA disclosure about their rules and fees. Property taxes. Warning! Taxes can go up after purchase. If the seller has exemptions, you may pay more than they did. Foreign seller withholding, FIRPTA. If the seller is a foreign national, the IRS may require extra tax withholding at closing. Key takeaway: read all disclosures carefully. They help you understand potential risks with the home. Ask questions if anything seems unclear or concerning. Paragraph 11, property maintenance. What condition is the home in? Once the contract is executed, the seller must keep the home in the same condition until closing. The seller must keep the lawn, pool, and home maintained. Not remove or damage anything that is supposed to stay. Key takeaway: the home should be in the same condition at closing as when the buyer agreed to buy it. Paragraph 12, home inspections. Can the buyer back out? This section gives the buyer a chance to inspect the home and walk away if needed. Inspection period. The default in the contract is 15 days, but there may be another agreed time frame for the buyer to inspect the home. If the buyer doesn't like what they find, they can cancel the contract and get their deposit back, as long as it's within this time. What can you inspect? General home inspection. Roof and plumbing, electrical and HVAC. Termite and pest issues, mold, radon, and structural concerns. Final walkthrough. You get to do a walkthrough before closing to ensure everything is still in good shape. Key takeaway: use this inspection period wisely. If something major comes up, you can negotiate repairs or cancel. If you miss this deadline, you're stuck with the home as is. Paragraph 13, escrow agent, who holds the money. All right, let's talk about escrow, the neutral third party that holds the escrow deposit until closing. What does the escrow agent do? holds the deposit safely until the deal is complete. Only releases the money when both parties meet the terms of the contract. If there's a dispute, they won't release the funds without written agreement or legal order. What happens in a dispute? If both sides disagree on who gets the deposit, the escrow agent may hold the money until both buyer and seller agree on its disbursement. Turn the money over to the court and let a judge decide. Key takeaway: if there's a disagreement on who gets the escrow deposit, it could be tied up for a while. Paragraph 14. Broker liability, your realtor's role. This section makes it clear that your Noble Star Realty realtor is there to assist you, but you realtor is not responsible for everything. What does this mean for you? Buyer and sellers should verify all information about the property: square footage, condition, HOA fees, etc. If you have legal or tax questions, you need to ask a lawyer or CPA, not your realtor. Key takeaway: as your real estate agent, we are here to guide you, but we are not responsible for legal or financial decisions. Paragraph 15, default. This is a big one. It explains what happens if the buyer or the seller breaks the contract. If the buyer backs out without a valid reason, the seller can keep the buyer's deposit as a penalty. If the seller backs out, the buyer can sue for damages or force the seller to sell. This is called specific performance. Or the buyer can walk away and get their deposit back. Key takeaway: if the buyer backs out without a good reason, the buyer can lose their deposit. If the seller backs out, the buyer has legal options. Paragraph 16, dispute resolution, how to handle conflicts. If there's a disagreement, this section explains how disputes should be handled. Step 1, try to work it out 10 days. Both sides have 10 days to try and settle the dispute on their own. Step 2, mediation. If no agreement is reached, both parties must go to mediation, a meeting with a neutral third party. Step 3, lawsuit. If mediation doesn't work, you can take legal action. Key takeaway: the goal is to settle disputes quickly without going to court. Lawsuits can be expensive, so mediation is the preferred option. Paragraph 17, attorney's fees, who pays if there's a lawsuit. If one side sues and wins, the losing party must pay the winner's legal fees. Key takeaway: if you break the contract and get sued, you may have to pay not just damages, but also the other side's lawyer fees. Paragraph 18, title and ownership. Making sure the title is free and clear. Before closing, the title company checks to make sure the seller actually owns the home and that there are no legal claims against it. Title insurance. This protects the buyer and the lender if any title issues come up after closing. What if there's a problem? If the title isn't clear, the seller has 30 days to fix it. If the seller can't clear the title, the buyer can walk away and get their deposit back. Key takeaway: title issues are rare, but title insurance is there just in case. Paragraph 19, Addenda, additional terms you might see. This section is where extra agreements, also called addenda or riders, are attached to the contract. These addenda clarify specific situations that might apply to a home purchase. If an addendum is included, it becomes legally binding, just like the main contract. Commonly used addenda. HOA disclosure. If the home is part of a homeowners association, this addendum outlines the association's rules, fees, and responsibilities. CDD disclosure. If the property is in a community development district, CDD, this explains any additional taxes or assessments you might have to pay. Condominium disclosure required if you're buying a condo. This provides details about the condominium association, including financial reports and bylaws. Sale of buyer's property. If a buyer needs to sell their current home before purchasing another, this addendum makes the purchase contingent on that sale. Broker compensation. If there are special agreements regarding how the real estate brokers are paid, this addendum lays them out. Appraisal, contingency. If the buyer is procuring a mortgage, this protects the buyer and lender if the home doesn't appraise for the purchase price. If the appraisal comes in low, the buyer may not be able to secure the loan, or further negotiations may need to occur. FHA VA financing. If the buyer is using an FHA or VA loan, this addendum includes special requirements that must be met for the financing to go through, such as property condition standards. Key takeaway: these addenda modify the contract to fit different situations, so it's important to read them carefully. Not all addenda apply to every transaction. Only the ones that are checked off in the contract matter. If there's something important that isn't included in the main contract, it should be in an addendum. Paragraph 20, additional terms, custom agreements between buyer and seller. This section is where specific negotiated terms between the buyer and seller are added. These terms should be clear, detailed, and legally enforceable to avoid disputes. Example, seller's repair obligation. Seller agrees to replace the existing roof with a new, permitted, and code-compliant roof before closing, using a licensed contractor. Proof of completion, including permits and warranties, shall be provided to buyer no later than 5 days before closing. Key takeaway: use this section for specific agreements not covered elsewhere in the contract. Terms must be clear and agreed upon in writing to be enforceable. If legal interpretation is needed, parties should consult an attorney. Final summary, what you really need to know. Escrow. The deposit binds the contract, disputes can delay its release. Broker liability, realtors help, but legal and tax questions should go to a lawyer or CPA. Default. If the buyer backs out and is in default of contract, the buyer could lose their deposit. If the seller backs out, the buyer can sue or walk away. Dispute. Resolution. Try to work things out before going to court. Attorney's fees. If you lose in a legal fight, you pay the winner's lawyer. Title and ownership. Seller must provide clear ownership. Title insurance protects the buyer. Closing process. The seller must maintain the home until the keys are handed over, and the buyer doesn't own the home until closing is complete and funds have cleared escrow. Special terms. If it's not in writing, it doesn't count. Final thoughts and next steps. You made it! Now you understand what's in the contract and what to watch for. Before you sign, do you feel comfortable with everything? Are there any specific concerns you'd like to address? Do you have any last-minute questions before moving forward? Noble Star Realty Realtors are here to help every step of the way.